All right. Trying to make sure that this works. All right. Looks like we're live. Let's get it started. I apologize, I'm 15 minutes late on this week's webinar. Just dealing with some technology issues over here back at the office. It's amazing to be back in the office after almost a year and a half of being gone. Apologize for the size of the screen here. It's going to be something I try to work on for next week, but let's just get it started. It's the content, right? So this is this week's prop trader market update, hosted by me, Derrick Goldensmith. Glad everybody can join. Just a quick disclosure here. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. The positions I have here, I'm 100% long. I don't have any shorts. Had some AMC short at one point last week. Don't have that anymore. It was a little scary there, but was able to work my way out. Got out of that Bed Bath & Beyond into the big move. I'll talk about all that today. Added a couple new day trades today in Root and Tilray, so currently still in those positions. But we'll jump into that in a second. About me, I think everyone knows me now. I'm senior trader and registered principal for T3 Trading Group. I've been licensed with T3 since 2011. I've really been here since 2010. I've mentored well over 100 professional traders at the company. I've managed, currently managing a group that's well in excess of 50. My spare time, I'm big into martial arts, skiing, and traveling. And it's like I was just saying, it's been incredible. This is the first webinar I'm doing in the office. It's the first time I've been in the office here in Manhattan, our headquarters, in about a year and a half. Spent the last year and a half working remotely, traveling to all different places, upstate New York, and then out to Long Island, and then Wyoming, and then Montana, and then Idaho, and then California, and then Idaho again, and then Wyoming again, and doing the weekly webinar from all these different places. And now it's exciting to do it here from the Manhattan office. I'm looking outside the window. We've got a beautiful view of the Statue of Liberty. It's good to see some of my fellow coworkers for the first time in a very long time, and I'm just super pumped to be here. So with that said, today I'm going to be talking about trading, charts, right? One of my big passions is talking about markets, so obviously that's what we're going to be talking about. Every week I try to update everyone on the current state of the market, and I always try to impart some small lessons that everyone can take away from this weekly webinar where they can input that into their trading. So we'll be talking about charts, and then we're going to be talking about T3. We're talking about how you can get involved in T3, how you can get involved in with my professional team of traders. I'm currently managing a group that is, I believe, in excess of 100 people, almost entirely all professional traders in the ProDesk VTF guys. Some of these guys have been doing this for decades, former hedge fund managers, floor traders, pit traders. So after we talk about current updates to the market, we'll talk about how you can get involved with that team. So with that said, let's go to the charts. All right, here's just a 5-minute of the IWM, which is showing some relative strength today. Here's a 5-minute of the SPYs, which have been completely all over the place. But for people who have been following what I do here, on a weekly basis, you know that my entire approach to trading starts from the big picture and then works its way down to the small picture. So that's what we're going to be doing again today. So starting with a big picture of the SPYs. Where are we? Well, we're at all-time highs this morning in the S&P, which is incredible considering all the volatility that we've experienced over the course of the last month and a half or so. Some of the stocks that we'd been looking at had gotten absolutely destroyed. Big bubble names going up 300, 400, 500% back in January, February, then crashing down 50, 75% when the bubbles imploded, and now a lot of those names have had real big bids again. We saw interest rates work their way higher, which added to volatility, particularly the NASDAQ. We saw, for a period of time, money get rotated into the reflation trades, get rotated into energy and materials, etc. And throughout all that, wherever the money gets rotated to, it seems like the S&P itself has constantly benefited. And here we are with the SPYs basically sitting right at all-time highs, so looking really bullish. As a lot of you are aware, one of the things that I like to do in my approach to the market is I look at three major indices, the S&P, the NASDAQ, and the Russell 2000, and then I like to categorize them either as bullish, bearish, or neutral. And then starting from that big picture understanding of bullish, bearish, neutral on these indices, I then can break down on, well, do I want to be long focused on this market, short focused on this market, or possibly a combination of both? Well, right now, with the SPYs basically consolidating at all-time highs, the S&P is bullish. The NASDAQ, if everyone remembers, I've been talking about needing a close in the market above this key 334 to 335 resistance area for the QETF. We've been talking about this for months. And guess what? Friday last week, when I was driving from the last leg of my drive this last weekend, I drove 11 hours on Friday, 11 hours on Saturday, 11 hours on Sunday. That last leg of that drive from Cincinnati was from Cincinnati to New York. But anyway, this last Friday, while I was driving, we finally got the close in the NASDAQ that brought us back to bullish territory. So I'm looking at a NASDAQ index here that is looking more bullish than it's looked at any point since probably mid-April. So S&P is looking bullish, NASDAQ's looking bullish. Let's look at the Russell. What was that key point in the Russell that I was talking about for about 2 months? 225 on a closing basis. Well, once the IWM, small caps, mid caps, started showing some relative strength again at the end of May, that relative strength has maintained itself, and here we are in the IWM at 232, so $7 above the area where I said the IWM flips back from neutral to bullish. So again, where am I with this market? For the first time in weeks of doing these webinars, I have time frame continuity where everything is pointing to the bulls. S&P at all-time highs, NASDAQ back above resistance, clearly bullish, IWM above resistance, back to bullish. So what does that mean for me and for my trading? Well, what it tells me is that the easy money is the long side right now. And that's the side I want to focus on until the message changes again. For most of the month of May, we were neutral or even bearish for little periods of time in some of those indices. When I was dealing with a neutral market, I could be long some stocks, I could be short some stocks. Generally, that's when we go to relative strength and relative weakness, which is so important. Relative strength and relative weakness, by the way, I've been talking about this week after week. That has been the key concept to this market environment in 2021. I can't tell you how many people I've spoken to this year who are complaining to me, oh, Derrick, 2021 is so much harder than 2020. No, it's not. It's not harder. It's just different. And you have to, if you're going to be a professional trader and you're going to be involved in this business for a decade or decades, you have to recognize the fact that market environments are constantly changing, and you have to recognize what that new normal is. Everyone who was just getting started trading for the first time in 2020 loved seeing these stocks that were going up 300, 400, 500%, getting involved with the YOLO option calls and everything else, and making a whole ton of money. And then all of a sudden here in 2021, when the market environment changes, they don't know what to do. Well, I know what they need to do. They need to focus on relative strength and relative weakness. Because if you understood that, and you understood risk management and money management, you got out of the way of these, Jumais and plugs and F cells on the way down. You got into XLE, energy. You got into materials like US Steel, CLF, FCX, ExxonMobil, right? Commodities are the biggest performers of 2021. And it was understanding money rotation and understanding relative strength that enabled you to be able to recognize this. So it's not a more difficult trading environment, it's just a different trading environment. And then what happened towards the second half of May is all of a sudden those small cap names, well, first the IWM woke up, right? The IWM closed in bullish territory for the first time here on May 27th. And for me and my team, coincidentally just happened to be when I was doing that open house for the virtual trading floor, if anyone was involved in that. We came in perfectly, and I honestly hate using the term calling the bottom, because that's not what I think successful traders try to do. Successful traders don't really call tops and bottoms in the market. What successful traders do is they recognize opportunities for counter trend retracements that could potentially lead to a reversal. And that is exactly what we did on May 11th for a lot of these names. I just happen to have Palantir up right now, but there's a whole list of about 20 of them or so that I provided to my team in the ProDesk virtual trading floor, where it was Palantir and Plug and Fuel Cell and Jumai and the 3D printing names and the marijuana names and the electric car names. They all bottomed more or less on that same date, around May 11th. And we came in on my team and recognized how brutally beaten up sentiment was. That these stocks had now, for many of them, gone down 60, 75%. A big signal for me was when I started seeing the Cathie Wood bashing taking place on Twitter all of a sudden. She was like the golden god when everything was at highs in January and February, and then all of a sudden at that absolute bottom, a lot of people don't like her anymore. For me, I like her, don't like her, that's not my business. I respect the thought process of someone who has become so successful, but I also pay attention to sentiment. And sentiment is just, it's in the world around you. When everyone wanted to be involved in these stocks in January, February, I was sitting here doing these webinars letting you all know that these names were in bubbles, and then I was staying away from them. And then when everyone was depressed about how much money they had lost in 2021 because they didn't have risk management and money management rules in place, and it enabled them to hold these stocks all the way down for this brutal sell-off, well, that's when I wanted to come in and started being a buyer. The degree of extension on that day on May 11th was massive into that gap down. It started as a retracement trade. That retracement trade has now officially become a reversal trade for almost all these names. They have gone from a pattern of lower highs and lower lows to a pattern of higher highs and higher lows. And I hate to say that I called the bottom, but I called the bottom. But let me just, I'm going to get, for anyone who has been following along with me regularly, I am always the first person to admit when I'm wrong on something, and believe me, I am wrong all the time, but I got to give myself credit on something when I'm right as well. We really came in here basically on May 11th and said this was it, we want to come in and be buyers, and these names have had massive turnarounds. I mean, just Plug is the one I have open right now. This thing went from $18.70 to now $34. And if anything, my concern is, and we were looking, by the way, at buying a bunch of these for continuation yesterday. DKNG was one of the ideas of the day on my virtual trading floor from yesterday. Continuation to the upside. NEO yesterday was one of the ideas of the day. But if anything, my concern at this point is that a lot of these things have now almost doubled from their lows. Again, just going back to Plug, that Plug low is 1850 or below, and this morning it went to 35 almost. So a lot of these things have now doubled off their lows. I was saying from the beginning, these stocks do not belong at the prices that they're trading at in January, February. And then honestly, the extreme flipped here in May, and now we're somewhere in the middle. And honestly, somewhere in the middle is probably where a lot of these stocks belong. Right now, the trend is my friend. So any of these positions that I might be involved in, I'm continuing to implement reward maximization strategies, for which there are rules as well on the strategies that we're implementing in order to maximize reward, where we trail off at targets, we trail off into large degrees of upside extension. The way I measure extension is the space between where the stock is currently trading and where the 8 and 21 EMA is. And we're implementing trailing strategies for the rest. I don't think that these stocks are getting back to their January and February highs. I would put that as rather improbable. But it doesn't mean that they can't continue from where they are into some further resistances. It wouldn't surprise me to see Plug maybe get back up to 40 bucks. But I'm also starting to become a little bit concerned at these prices after they've now given basically 100% moves from early May to here in early June. I'm starting to get a little bit concerned that the move has become a little bit too big. With that said, we've really seen the return of Wall Street bets. Oh my God, that AMC was absolutely insane. I mean, when AMC had its first bubble back here in January, it gave this amazing, incredible move from like $2 to $20 in 2 weeks. Well, how about this move? You know, move from, depending on where you want to start it, but we could just say the beginning of May, under $10 to pre-market on, I think it was Thursday of last week, $77. Mind-blowing. Absolutely and utterly mind-blowing of a move from AMC. Does it belong at these prices? I don't think so. Do I want to be short on the day when it goes from $36 to $73? Probably not, even though I was shorting it at certain points on that day, and then honestly did really well with it short that next day when it gave the retracement back from $69 to $38. So I have actually been trading AMC really active. I haven't traded it today, but these moves are just incredible. And again, it's Wall Street Bets is back. They're back, for better or for worse. I am not here to be providing an opinion to you on if this is a good thing or it's a bad thing. I will provide an opinion that they should be allowed to do what they're doing. You know, you got the big hedge funds and Bill Ackman and all these people who have been basically doing what Wall Street Bets just did, but just amongst themselves with their hedge fund buddies for decades and decades, and it's no problem. But now all of a sudden the little guy starts winning a little bit, and they want to start restricting accounts. They should be allowed to do it. But outside of that, what I tell my best friend that it's a good idea to buy AMC at $60. I try not to give investment advice to friends, but I'm going to go out on a limb, and I'll probably let my friend know probably not the best investment for your retirement account to be buying AMC at $60. Because, again, it just doesn't belong there, which doesn't mean that it can't continue. So these have become incredible trading vehicles if you can afford the risk. You just got to recognize that when you're trading AMC, I mean, those couple days last week when this went nuts, I was in this thing when it got halted on multiple occasions. And they can do these volatility halts. So you could be long or you could be short, and all of a sudden they halt it. And at that point, you can't manage your risk. It's wherever it opens after the halt, and you hope you get lucky. And that's not how I like to trade. I like to trade when I have a clear strategical advantage from a supply and demand perspective. So Wall Street Bets is back. AMC went nuts. Wendy's was the story of the day today. I don't really know what's going on with this. One of my traders told me that somebody posted a picture of a chicken nugget on the internet or something, and people went crazy and they decided to get Wendy's up 20%. I don't know. I've always thought that Wendy's has better chicken nuggets than McDonald's and Burger King personally, but is a picture of a chicken nugget worth 20%? I'll let you guys decide that. But this is kind of the environment where we're in again, where all of a sudden it's just crazy how fast things move is kind of the biggest thing I would say about it. We went from January and February to this being insane, to a month ago everything was dead, to now here we are a month later where all these stocks are giving these huge massive movements again. And for me as a tactical trader, I love the price action. You know, a lot of my guys trading BlackBerry on the team. I was trading this AMC. I had a, position. One of my traders in the virtual trading floor had this great idea back here on May 25th when Sundial was at about 75 cents. We all remember that Sundial was also one of these Wall Street Bet stocks. He basically said, hey, I got an idea. If Wall Street Bets is coming back online and we buy some Sundial here, it's almost like taking an option contract on Wall Street Bets. Right, if it works out really well, that'll be fantastic, because I can, well, first of all, if it doesn't work and I'm buying Sundial at 75 cents, where am I getting out? 70 cents? Okay, fine, I'll lose my 5 or 7 cents. But if Wall Street Bets comes online, this could be a double. And I was like, man, that's a great idea. So I started buying this up as well with him, and basically had a price target of a double. I said, all right, 75 cents here. I'm going to see if I can get a move to $1.40. That's what I said. And then I woke up in Wyoming on June 3rd, and I logged into my Lightspeed. I was a little bit tired that day because the night before I had a couple of drinks, and somebody bet me to jump into a pen with a bunch of longhorn steer and see if I could grab one of their tails. So that was the night before. But by the time I woke up, luckily Sundial was still trading at $1.70. And I was able to sell the majority of my position. So I got out of most of my position at $1.40. The trade worked fantastic. I just have a tiny, tiny bit of it left, kind of just in case. So that has been the normal again in this market environment. And for me, I'm cautious about it at a certain point. I know the SPYs are bullish. I know the Qs are bullish. I know the IWM is bullish. And by the way, one of the big clues that we're in a bull market, a common feature of a bull market, is to see consistent and constant money rotation. So basically, one day the IWM is strong, the next day the NASDAQ is strong, the next day the IWM is strong again. There's constant money getting rotated. Today it's energy, maybe tomorrow it's big tech, the day after that it's the meme stocks, the day after that it's a lot of those other beaten up names that I spoke about earlier, your Jumais and your Palantirs and your plugs and things like that. That is a sign of a not unhealthy market. And even when GameStop went to 500 and change pre-market that one day, the market itself technically never seemed to be in a bubble the same way some of those stocks were. So there's been a lot of opportunity out there, but you got to understand relative strength and relative weakness, and you have to have rules. I really think that a lot of successful trading comes down to two major things: having a game plan and having rules, specifically rules for money management and risk management. As I tell my team literally every day, that is the key to success in this business. And then having rules in place for any possible scenario. Having rules in place to be able to maximize your reward when trades work out. Having rules in place to limit your risk when trades don't. And having rules in place for any in-between scenario. I've been trading long enough at this point in my career where I probably have a rule for what I'm supposed to do based on literally any situation that I find myself to be in the marketplace. So that's kind of where we're at now. That's this week's update. I'm back in the New York office. Definitely was dealing with some technology issues this morning, so I apologize that I got off to a little bit of a late start with the webinar. But I hope everyone was able to still, learn a couple things and understand kind of where we're at and understand to be very careful in some of these meme stocks. With that said, let's talk a little bit about prop trading with T3 Trading Group. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We have 4 physical offices, including our New York City office. That is where I am currently located. How awesome is that? We've got some others as well that are more, satellite offices. But we have remote traders all throughout the country. And honestly, trading remote with us is fantastic. In a lot of ways, I think it's even better than being in the office. I think it's less stressful. You have the same amount of education access and communication access remotely as you would in the office, specifically through the Pro Desk virtual trading floor, which is where the majority of the pro traders at T3, it's why it's called that, hang out. T3 Trading Group is an SEC broker-dealer and member of FINRA/SIPC. This means that all of our traders have to become licensed with an SIE, Security Industry Essentials examination, and a Series 57 examination. In addition to that, you have to pass a background check before you can even get started. Once the exams are passed, we have different trading software options that you can choose from. We actually have 4 options now: Lightspeed, Sterling Trader Pro, Wolverine, and Realtic. The one that I've been using personally for well over a decade now and typically recommend is Lightspeed. So once the exams are passed, we get you started on your trading software of your choice. They're all excellent softwares. On the retail side, by the way, we have Sterling Trader Pro. It's a very professional software for retail traders at T3 who don't necessarily want to go through the hassling of getting licensed, or don't necessarily want the, I think it's advantageous, capital access that you get as a professional trader. We have different asset classes you could focus on. Personally, I've been an equities trader with T3 for all this time, but we also have equity options, we have futures, we have options on futures. So if any of this interests you, reach out to me, shoot me an email, and I'll chat with you about it myself, or I'll set you up with the right person. The reason why, and I think that this is worth mentioning because I speak to a lot of people who are interested in joining T3 who trade options. Here is why I don't trade options. I think that options are an excellent tool if you're a retail trader and you know what you're doing, you're sophisticated enough to really understand how they work. I think they can be an excellent tool because of the natural leverage that's inherent in the product. It can increase your risk-reward ratios. But for me as a professional trader, T3 gives me as much capital access as I could ever want. I'll talk about it in a little bit, but we usually start by allocating our incoming traders capital access at 20 times for equity day trading and 8 times for overnight positions. So my thought process has always been, why do I want to deal with a less liquid product that is subject to time decay just for capital access when I already have as much capital access as I could ever want? So that's personally why I've always focused on trading equities specifically. But we do have options traders here at the company. They tend to specifically focus on more complex option strategies, which to me that makes a lot of sense because they can't necessarily be done in equities trading in the same way. So again, if trading options interest you, or you're just interested in trading professionally at all, definitely reach out to me. What new traders should be aware of: you just got into the business in the last year or so. You started trading in 2020. You need to realize that trading has a very large learning curve. And at T3, we pride ourselves on our training and development access. So you are going to have access to daily morning and afternoon meetings, a host of other professional traders, many of whom have been in this business for decades. You're going to have access to a 1-month training program when you first get started. And we provide all of that for free. We are incentivized to see the traders who work with us become as successful as possible. You will have to fund your account with a capital contribution. As I was saying before, we typically start by providing incoming traders capital access at 20 times their contribution for equity day trading and 8 times their contribution for overnight positions. And then you're compensated through a profit split. So for example, someone who were to put $50,000 into a professional account with us, we basically give you access to $1 million to trade with. So you want to be a $1 million trader? There you go. Reach out to me. My email address will be up again at the end. And if you're an experienced trader, well, we're a great place to come as well because our balance sheet is so strong and you can leverage that for your own trading. You want to come into T3 and put $2 million into your account because you want access to $40 million? It's probably not a problem. Here's my email address. Again, reach out to me. And once again, you get access to all this other great stuff for free. You get access to the Pro Desk virtual trading forum that I run. It's worth about $2,000 a year. You get access to the training program classes I put together. It's worth, like, I think they sell for $800. You get access to Scott Ruther's virtual trading floor. It's another couple grand. You get access to Ruther's newsletter. It's another $1,300. You're getting access to thousands of dollars worth of stuff for free just because you're trading with us. And again, the reasoning behind that, one of the cool things about getting involved with T3 is everyone's incentives are online. We want you to be successful. If you are a successful trader, you're going to be happy because you're making money. T3 is going to be happy because they're making money because you're making money. It becomes a win-win situation. So that's what we want to be able to do. And for us, if it means giving up some short-term revenue on some subscriptions, because we're going to be keeping you here for potentially decades, again, that's a win-win scenario. So reach out to me. I truly believe that our prop offering, if you're trying to trade professionally, is the best in the business. So once again, here's my email address. If you want to chat about anything, you want to talk about getting involved with T3, you want to talk about trading in general, you want to talk about how awesome my trip was and how I miss the horses in the back there, Kate and Dixie, that I was speaking to you guys about every week, I'm happy to chat about any of it. Here's my email address. Reach out to me, and I'll set up a call with you either directly with myself, or if you have other specific interests here at T3, I might set up a call with you and someone else. But again, here's my email address. Don't hesitate to reach out. And with that said, I'm going to jump back into managing my positions. I got a whole bunch of bids and offers filled while I was doing this webinar with you guys, so I need to get back to managing it. I wish everybody continued success, and I hope everyone learned a lot today. Have a great rest of your day, everybody. Thanks for the comment there, Omar, just so you posted that in.